All right, we're going to move along to our next speaker, John Rooney, Special Projects Manager at Self Help Climate Capital. John serves as, well, I just said what he serves as. He supports team operations, strategic planning, program management, and project management across a range of initiatives, including the organization's green consumer lending. He brings 7 years of experience wearing multiple hats, as I know a lot of us can relate to that in the nonprofit sector, and is a graduate of Duke's Nicholas School of the Environment. I'll pass it off to you, John. Thanks for being here.
Yeah, thank you, Gretchen, and for having me, and thanks to everyone who's already spoken. It's just so much great information that's being shared today. Um, let's see if I can get the presentation up and running. So some of what I've got queued up at the very beginning here has already been touched on, but I think it's worth at least repeating just a little bit just to dig in. So one thing I want to emphasize at the beginning is too many people have been shut out of the financial mainstream. Economic opportunity often begins with access to fair lending, whether you're trying to purchase a home, save up to send a child to college, or save up to open a small business. Requiring those goals requires access to the resources that you need to succeed. And historically, different prejudices, kind of blatant discrimination have kept large swaths of the population from being able to access fair lending that includes people in low income communities, women, those in rural areas, and communities of color. The good news is that there is a better alternative. You've already heard from self. Hopefully, it's not too confusing to then also hear from self-help, but thankfully, there is an alternative for those low-income individuals and households who have been shut out of the financial mainstream. No access or access to financial resources with predatory terms keeps people trapped. But the good news is CDFIs, credit unions, green banks, community banks can step in here to really protect consumers and then give them access to the resources they need to pursue opportunity. So unlike traditional banks, community-centered lenders focus on and specialize in lending to individuals, organizations, and businesses in underserved communities through things like financial education, business coaching, and loans with fair rates and more flexible terms. One thing that I sometimes like to say when just to add a little bit of color to this is where traditional lenders might see risk, CDFIs, community banks, green banks see opportunity. So we work to get to a yes to help those who have been traditionally shut out of the financial mainstream access the resources they need to succeed. So at Self-Help, our mission is to create and protect ownership and economic opportunity for everyone, but particularly for those who are people of color, women, residents of rural areas, or live in low wealth communities. We are a family of four organizations that includes two different credit unions, one that's state chartered, one that's federally chartered, a nonprofit loan fund that we call the Ventures Fund, and then a research and policy group, the Center for Responsible Lending. Um, CRL, just a kind of a quick note, started back in the early 2000s, really focused on fighting against predatory lending, has been successful in capping rates that can be charged in a number of states and was a major force in helping to stand up the Consumer Financial Protection Bureau. So really protecting consumers, helping lift up and provide the resources that are needed for others has really been at the center of what we do. And that's, I should take a quick step back. The Center for Community Self-Help started back in 1980, Self-Help Credit Union and the Self-Help Ventures Fund in 84. The Federal Credit Union started, I believe, in 2008, and the Center for Responsible Lending back in 2002. Uh, we've founded in Durham, North Carolina, although now serve 10 states through our credit unions and nationally through our commercial lending and secondary market activity. Our origins are in helping stand up worker-owned cooperatives, and our origin story as a credit union is there was a group. I think Doug mentioned, houses of worship being early supporters. That's certainly true for us. But the initial deposit in the credit union was from a bake sale from a group that was looking to start a worker-owned bakery. So just a little bit of background on kind of our origins and where we come from. So we work to advance our mission a number of ways. Obviously, we're here talking about energy efficiency. We also support small business, nonprofits, other community institutions, schools, childcare, healthcare centers, things like that. We work to expand home ownership, invest in communities through our affordable housing and kind of downtown revitalization efforts. We have a really active real estate team working across the country, and overall, we're working to create financial fairness for all. So I just want to give you a quick snapshot of where all we serve throughout the Southeast. So we start up in Virginia. We've got one branch there in Galix. We've got 24 branches throughout North Carolina. As I mentioned, we were founded in Durham. We have a number of branches in South Carolina. One that's not listed here that opened recently is in Summerville, so down towards Charleston. We've got an Atlanta branch in Georgia and then 8 branches in Florida. So just a sense of our geographic spread, at least with our physical locations, although we can serve throughout the state wherever we are. While this is outside the scope for today, we also do have credit unions in the Midwest, Northeast, and on the West Coast. So can serve the entire country in that way. So I want to talk a little bit about our own financial product here, our Energy Saver loan. Overall goal is to help people save money through financing energy efficiency improvements. Really grateful to Matt for his kind of explanation of energy burden. We look at our work around energy affordability as really central to economic justice. So many families face energy burden, as Matt shared. One thing that I think maybe just add a little bit of color to what he shared, while energy burden is defined as a household spending more than 6% of its income on its energy costs, it's not uncommon for low-income communities to be spending 20% or more of their income on energy. So that's where it's so important to be able to help those families make energy efficiency improvements, drive down those costs, and be able to have money for other things, for building wealth, saving for their goals, things like that. We've got our rates listed here. I do want to note that in the Southeast, we're fortunate to have subsidy that's allowing us to offer much lower rates for those who are under 80% of an area's median income. So here's some of the nitty-gritty. I won't spend a whole lot of time here, but you can see some of the just general requirements and eligibility kind of frame measures, things like that. So our loan range goes from $2,500 to $50,000, covers things like heat pumps, air sealing, insulation, roof repair. As was noted earlier, oftentimes a home might need basic health and safety repairs before it can really gain the benefits of energy efficiency. We don't want to seal a home if it still has mold in it or if it has a leaky roof. So this loan can also be used for some of those basic repairs. I think some of the things just to highlight what can maybe perhaps set self-help apart. We've got no closing costs or fees, fixed monthly payments that won't change throughout the life of the loan. We've got a physical branch presence for those that are looking for that, but also a seamless online application. We do offer longer loan terms, up to 15 years, that can create monthly payments that result in folks being cash flow positive from the very beginning. For those who may not be eligible right away, we offer free financial coaching through our credit unions. And then again, for those who maybe are looking to apply online, we've got staff available at any time to help you with the application. And those staff speak fluent in both English and Spanish. I wanted to speak a little bit about other financing opportunities that can complement financing that I think are really important to know about. Both North Carolina and Georgia have stood up state home energy rebate programs. That funding flows from the Inflation Reduction Act. Those programs approved by the DOE and help finance energy efficiency improvements for those making up to 150% AMI. For those who make under 80% AMI, the full range of the rebate is available to them, excuse me. And then for those making between 80 and 150% AMI, they're eligible to receive half of what the full rebate amount might be. In addition to those two states, many utilities, both the big IOUs as well as munis and co-ops, offer rebates and other energy efficiency incentives for customers that are great complements to the financing options you've heard about today. And then additionally, especially for those who are very low income, states implement weatherization assistance programs so that can help very low income households get things like insulation, some air sealing, maybe repairs to things like windows and things like that. So these programs, I think, are critical components of helping low-income families gain energy efficiency improvements. My understanding is other states in the Southeast, including South Carolina and Florida, have submitted programs for approval, and we're hoping that the DOE is able to approve those soon and help expand the number of states in the Southeast and around the country who can benefit from these rebate programs. Wanted just to give one illustrative example of how a state rebate program can complement with financing. So here, this is a North Carolina example through the Energy Saver NC, although it could apply in Georgia as well. So you can see here that someone is looking to do both a heat pump replacement, but also do air sealing and insulation. Because they're low income, they're able to get the full $16,000 rebate through the homes program. But that still leaves a gap and that's where fair, affordable financing can step in. A conventional loan might result in someone having a monthly payment of over $200, but with lower interest rates, longer terms, again, we're able to significantly drop that monthly payment and get it to a place where ideally the borrower is cash flow positive from the very beginning. I do want to mention just briefly that in addition to consumer level lending, we also are engaged in commercial lending. We provide senior debt for commercial projects focused on renewable energy, clean transportation, and building decarbonization. Just some examples of the kinds of building decarb projects that we're looking at. We're looking at helping to decarbonize affordable multifamily housing, schools, both public and private, community centers, nonprofits, and houses of worship, and particularly those that benefit those living in low-income communities. The picture to the right is an affordable housing development in Durham that we helped finance that's up to a very high energy efficiency standard. So those residents who live there see very, very low energy bills. We're also active in the secondary market. So for those who aren't familiar with that is, it's a marketplace where one financial institution can either sell or buy a portfolio of loans from another. For us, this is a really key way that we advance our mission. We're fortunate to be in a position where we have capital, and in addition to our own lending, we can support other lenders in scaling the green lending that they're doing by purchasing portfolios of their loans, which provides them the ability to deepen, scale up the lending they're doing, often in places where we're unable to serve. So it's a great impact multiplier, and really, I think, an example of great teamwork among institutions engaged in green lending. I want to I mean, especially since we got to hear from them, I want to do a big shout out to Self. They've been just a great partner for us and really a great example. I think, as was mentioned, they really helped pave the way early on for what equitable green financing can do. So really grateful for everything they've done in this space. And both with, we've participated in loans with them, and some other institutions that they again really inspired by the work that they've been doing, and yeah, just wanted to spend a moment, take a special shout out for them. I'll pause there. I know I tried to move quickly. I felt like we were starting to run a little low on time, but happy to answer any questions now, or I've shared my email here for questions later. That I'll stop sharing.
Yeah, thank you, John. Appreciate that. And if anyone has questions, please drop them in the chat. I do have one to kind of get us started, but I'm curious, what percentage of your projects include pre-weatherization work or working on those?
When you say pre-weatherization work, like the kind of health and safety upgrades?
Yeah.
Yeah, I don't have a specific number. I wish I did. But I mean, especially for lower income housing, it's very common to see that as a need. So yeah, I think that's something we tend to see more with our LMI borrowers than with non.
Oh, that's good to know. Um,
Yeah, especially maybe just a quick note, it's especially common in I was recently at a credit community development credit union conference, and I was talking with one of my colleagues in South Carolina, and she was talking about how there's a whole slew of housing stock that was affected by hurricanes 20 years ago, where all of those folks got new roofs at that time, and now those roofs are aging in need of replacement. So there's also, I think, a geographic note to that, where there's regions where it's becoming especially notable, a need there.
Yeah, that's great to know. One follow-up I had, you mentioned you showed us some of the states that you worked in that and that
Mhm.
there's physical locations, but you work nationwide. For some of those states where you don't have a physical location, how does engagement look like so folks can learn about the programs and resources you offer?
Yeah, so I do want to note that our consumer level lending, we are only able to do that in states where we do have physical branch presence, but nationwide we can do our commercial lending or engage the secondary markets. But even in the states where we have credit union presence, obviously we don't have a branch rather in every single town throughout the state. But we try to work regionally where we're doing outreach with other community-based organizations, local governments, really trusted partners to help, understand the needs of those communities and then see if we don't have something that we already have in terms of a service. That's often the impetus for creating new services, really working to fill needs that are identified. But no, as was mentioned earlier, I mean, partnerships are everything in helping to reach folks in need.
Yeah, partnerships are very, very valuable. Gretchen?
Yeah, John, I wanted to ask, I guess, in the spirit of partnerships, what does engagement look like with y'all, or is there engagement with the philanthropic sector? We're talking
Yeah.
about financing and funding here and haven't really mentioned them yet. So I'm curious how that possible collaboration works.
Yeah, no. So I'll do maybe a quick what's the word I'm looking for? You have to forgive me. I'm a little sleep deprived this morning. I took a red eye in from the West Coast, but philanthropic support I think looks a couple of different ways. So earlier, um, we heard a little bit about philanthropic support in terms of foundation gifts or program related investments. It's things like those that help us provide subsidized rates for lower income borrowers. It's really key to have that kind of subsidy that helps just mitigate overall lending risk. I think too, right, oftentimes philanthropies are very deeply embedded in the communities they're based in. So they can just be incredible partners in terms of being connectors to lots of folks within the overall either communities they're in or just general philanthropic space. It's the kind of thing where, funders all talk to each other, just like all of our organizations, we're frequently in conversation with self and other equitable green lenders, sharing best practices and things like that. It's also true at the funder level in terms of philanthropy. So that can create a really virtuous cycle where once there's been like one really successful partnership, it can lead to others. But for us, it's really key that I think the philanthropic support has been really key in helping subsidize the rates we're able to offer, make them more accessible.
That's great. Thank you for that. Okay, I think we do need to move on to our last speaker. I really appreciate sharing your flying back in the middle of the night and to share your expertise and time with us this morning, John. Um, and reminder that links are in the chat. Samantha's putting those in so you can hop on Self Help's website and check out more information about them. Okay.